talk insurance, a couple of things. This would be true whether it was car insurance or just some other type of insurance. The deductible is the amount you pay for any repair when it comes to a car. Insurance pays the rest. So, for instance, deductibles with cars normally range somewhere from $250 to $1,000. Sometimes they can go a little bit higher than that. So, you get in an accident with your car, there's $3,000 worth of damage, you're only responsible for the deductible part. And again, that's assuming that you have fault in it. If not, usually the other person or their insurance company would end up paying things. But the insurance pays the rest, hence why we have insurance. So that's not the only part of things that you're going to have to pay for, though, unfortunately. So an annual base premium is a combination of your deductible comprehensive, we'll be discussing these in a minute too, and collision coverage you have. So like, even though for like a deductible, let's say, is $500, that doesn't mean you're paying a $500 premium. It just means that's what you're going to pay on top of things when you go to do this. How high your deductible is will be part of determining, though, how much your insurance costs. Collision, how much are you covered for if you get into an accident? Is it $10,000, $25,000, $50,000? You're like, my car's not even worth that. No, but the things you run into might be. So if you run into somebody else's car and you're responsible for it, bless you, that would be part of what you're paying your insurance for, so you don't have to pay that whole thing. Okay? Comprehensive comes into your car, the other person's physical health, your physical health, and some things like that. So car insurance covers a lot more than just your physical car. So some things that can determine your premium. How old's your vehicle? The newer it is, the higher your premium's going to be. Because it's going to cost more to fix, to repair if something happens to it. The amount of insurance you have. Do you want to be covered for $100,000 if somebody gets hurt? $300,000, $1 million, who knows? Depending on how much coverage you have in those instances, that's going to have a basis on how much you're going to be paying for your insurance. And this is my all-time favorite. Not really. And your insurance rating group. Now let me explain this one for a minute. An insurance rating group can include things like your age, your gender, what type of car you are driving, if you are married or not, if you're in school or not. All these different little things that they decide to put into a pile to determine if you're a lower risk candidate, a higher risk candidate, and things like that. So you'll hear a lot of things from insurance companies. Well, your rate's high now, but when you hit 21, it'll go down, and when you get married, it'll go down, and when you're driving an older car, it'll go down. And sometimes that's true, and sometimes it's not. But those are the things that go into that. So when you get down to it, the thing that you're going to see on the bill when your bill comes through is your annual premium. How much you pay for your coverage. So if you get a bill for your 6 months of car insurance and it's $600, a lot of places don't do annual premiums. They'll do what are called biannual, twice a year. But if you put them together, that would be your annual premium. So if you pay $600 twice a year, it's $1,200. It's, $400 3 times a year, that'd still be $1,200 or something like that. So again, your annual premium, okay? Factors. Oh boy. Driver rating. Now again, this isn't something you get to see a chart on or something. You just got to kind of see. So typically, that's determined by your age, your marital status, because for some reason they think you slow down a little once you have a ring on your finger, and the amount you drive. So, for instance, if all you really do is drive to and from work and your work's 10 minutes away or something, your driver rating is going to be higher. So there's less of a chance for you to get into an accident. But let's say every day you're driving into Chicago to work and driving home, and people do this, your rating is going to be lower. You're going to have a higher rate because you're driving more, you're putting more mileage on, and the more you're out, the more apt you are to get into some accident, whether it's your fault or not. If you're younger, your rates are going to be higher than when you're older, to a certain point. When you get real older, then you kind of go back into that issue there with some things. And again, marital status, they tend to get cheaper rates than people who are married. They're kind of chilling a little bit more. So, when you're trying to figure out mathematically what's going on with this, because it's all math, insurance is absolutely all math when you're trying to do this. So, you're going to take, and I'm going to try and do this part in colors. Your liability premium, okay, what would happen if you caused an issue with somebody? Plus your comprehension premium. One more. Plus your collision, I'm going to go off the screen. Premium. What's the risk of you doing damage to another car or someone else? Plus, what's the risk of you having some physical problem of your own with your car, with what you might run into, plus your car having an issue itself. Those three things, they come up with numbers for, they add them up, and that's where your base premium is going to come from. Your annual premium, what you see on a bill, this is the part you actually get to see that's kind of more broken down, is your annual base premium. So that number from above, you'll get to see it, you just don't get to see how it's broken down. Times, yes, we get to do some multiplying today. It's not just going to be adding. The driver rating factor. So we're hoping that number is small, real small, so we're not having to pay a whole lot. So this is actually a really good example down at the bottom of the different parts that go into your insurance policy. Let me move this up a little bit. So, okay, liability insurance. This covers bodily injury, you know, the old whiplash, go to the hospital, something like that. And property damage. So when you see these numbers, like they're all these 25, 50, 50, 100, 100, 200, they're not normal fractions. What these are is the difference between one person or a maximum total. So like for instance, if I have 2550, I'm covered for up to $25,000 worth of damage to one person and $50,000 for an entire car. So let's say there's 3 people in the car and you run into them. The most you're going to have come out or get paid from your policy is $50,000, even if all 3 of them have bills that are over 25. Okay? So that's the max for one person, that's the max for a whole car. And again, they're always talking in thousands and things here for the typically. They're not talking like $150 and stuff like that. So as you get more coverage, you're going to pay more. So you'll notice, 25 to 50,000, it's not double, it's like $6 difference. So most of the time people tend to take the additional coverage. If it's 100,000, now we're like $14 difference. You're like, oh, you do that a couple times a year. 28 bucks. That's a trip to the fast food place in Starbucks. You got 28 bucks. So, but you're covered more if somebody gets hurt because, I forgot to mention this, those numbers are the max that your insurance company will cover. So if you get into an accident and you have 2550, and there's $150,000 worth of bodily injury and property damage, insurance is paying $50,000. You're on the hook for the other 100. So you really want to make sure when you're getting insurance, you're just like, I just want the cheapest. Not always your best option. So you want to kind of look into some of these things a little bit. So if somebody wanted to cost out bodily limits of 100, 200, and property damage limits of 50,000, again, I'd look for 100, 200 on bodily, 50,000 on damage limits, and we just would work our way into that box. So your premium would be $258 because liability puts bodily injury and property injury together. So you can kind of watch for that. As expensive as hospital stuffs are, you're usually going to want to get at least into the 100 range on that if you want to be safe. Comprehensive. Loss to fire, vandalism, or theft. Okay, if something starts on fire inside your car and burns it up to a crisp, you're covered. Somebody comes along, doesn't like you at work, they take a key and they key the side of your car. Okay, that's covered. Or if somebody swipes it. We'll have to chat sometime about which cars get swiped the most often. It isn't what you would think. It's not the most expensive ones. So, when we're doing comprehensive, again, you'll have a deductible. I don't know anywhere where the comprehensive deductible is $50, but hey, it is what it is. Your age groups come into play here, and here come the multipliers. It doesn't mean you're driving when you're 10, okay? They break off the ages of people into groups. But again, they don't tell you necessarily where the break-off point is. So, here, what's the cost of comprehensive insurance of the car in age group D? I'm willing to bet this is the older people. This is probably like my age range or a little bit older. And insurance rating group 13. Just follow it into the chart. And again, these rating groups that are up here, that stuff again, based on the age of your vehicle and this driver rating factor and all these other things, your age, your marital status, how much you drive, they just fit you into one of those categories. So, I mean, there can be a significant amount of money difference depending, I mean, that's like more than double what that is. So I'm thinking this is more like here, teenager that's driving a lot. That's probably what we're looking at. Versus middle-aged person who only drives to work and back. and like has the grandma car that they've had for 5 years and has 5,000 miles on it. Something like that. And finally, collision insurance. This one's kind of easy to see. Oh my. Oh, there it goes. If you are in an accident, typically, whether it's your fault or not, the collision insurance will come into play unless you were just like really bad in what it is that you did. So again, here is our driver rating factors again in your age group. Younger ones tend to get in a few more accidents. Older ones tend to not quite as much. So again, what's the cost of collision insurance in Group B? An insurance rating of 15. We just follow it along. So that's seriously what a lot of your agents will do when you come in. They look at some of your information, they type it into a computer, and it spits out your age group number, and they give you numbers. Nothing too bad. Now, I'm going to try not to kill you all with this. I mean, not literally anyway. You're like, oofta, there's lots of charts and numbers. There are lots of charts and numbers. That's true. So, okay. Use the table to find the annual base premium for someone purchasing liability, comprehensive, and collision. So we're going to get a number out of each of these. So the bodily injury, $2,550. Property limit damage of $50,000. So there's my first number. Car in age group C, an insurance group rating of 14. So comprehensive, C14. I add that in. Also collision, same thing. Age group C, group 14. And let's see here. So that premium would be $601.20. So, I mean, it's not real complex where the numbers are coming from, because basically all you're doing is just kind of following all the things. I'm actually going to circle these, because that way if you go back to look at this later, I don't want you to have to go looking too far to see how that works. The next two are the same thing. I'm not going to bore you driving you through 3 of these at once. That's a little bit of overkill. So, again, read, though, for what coverages they're wanting. You know, do they want all 3? Do they only want 2 out of the 3, which sometimes you're allowed to do? And kind of work it that way. So one last one. Let me roll down here a little further. All right, Doug McDougall has a driver rating factor of 3.7. His insurance includes 5,100 bodily limits and $50,000 property damage limits. His SUV is in age group B. You're like, holy cow, dude, there's a lot going on here. An insurance rating group 10. He has a $50 deductible comprehensive and $50 deductible collision insurance. What is his annual base premium? Hello. What is going on with all this? So, when I come back up, I'm going to look and I'm like, all right, 50, 100 bodily. I'm going to change colors here. 50, 100 bodily and 50,000 in property. Oop, I'm not in the screen. Come down, Hardy. There we go. So oh man, 3720. I'm going to fit this all in yet. His SUV is in Group B. All right. An insurance grading Group 10. Ooh, good job, Doug. Doug got one of the cheaper premiums here. And then finally, $50 deductible comprehensive, $50 collision. Yeah, we got that part already. So we've got Group B 10. So for both of those. So we're going to add those up. But then we get to throw a twist in that we haven't gotten to see yet. Calculate the annual premium. So here, you're going to take your answer from part 1, and we're going to multiply times the driver rating factor. Oofda. As I was just saying how good things were going, they're about to get pricey. That's the number you're going to see on your bill. This was just kind of doing some things to get you started, and then multiply again. Times this driver rating, your age, how well you drive, how far do you drive, and all that stuff. So, again, not real complex, just I have to keep track of where to find these numbers in the charts that they're given to me. So, do I want to play one more of these? Yes, because the driver rating one is due. I got one last one. I promise I'll stop after this. Except our chart. This is going to get a little more interesting. All right, $2,550 bodily and $25,000 property damage. All right, $2,550 and $25. So another color to play with here. So $206.40 plus age group C and rating of 13. So C13. Let's see here. C13. C13, $98, and C13 is $260. So 98 and 260. Again, this is just the base based on a few basics about the vehicle and the age group a little bit. Again, it's not looking bad at the start, but, oh, Nate, holy moly. Driver factor rating of 4.1. That's not good, Nate. Not good. We want that a whole lot closer to 1, because this is going to bite you in the hiney. Yep. Now, again, most of the time with insurance, you get the option of paying it a couple of times a year or monthly or whatever, but still, ow, like almost $200 a month just for the insurance. No gas, no car payment, no nothing. So, ugh, that would not be a whole lot of fun. So, again, just to get you a little bit of practice, we don't want to go cray-cray here. We don't need to. But again, understanding where your insurance premium comes from hopefully will give some of you some incentive to like lay off the lead foot and some of that stuff. Save yourself some money or your folks some money or everybody some money here. So we're just hanging out on page 9. Annual base premium, those first ones, just taking them straight from the chart and then having to do the annual premium down below. So nothing too damaging here. No quiz for the rest of the week. We will quiz next week and then head into personal finance, I think, is where we're going to head. Depending on if I find an activity I think is worthy, I might pull the activity card. But if I don't, we will wrap up cars and then head to personal finance because I think that's going to help you out a little bit more than buying a house when you're 16, 17, 18 years old, something like that. So